Hey everybody, it's Mark Yegi. Welcome back. And I just want to talk really quickly about Crowdstrike. Now, this is a really great instruction in what happens when there's destruction in a stock. And I think we're at the beginning of what could be destruction. Of course, I'm not Nostradamus. I don't know. I only play probabilities. But I'm looking at the chart action on Crowdstrike, and I made a video about it a few days ago. Now, if you remember, Crowdstrike is this backbone company that connects a bunch of companies to the cloud, namely the Microsoft Azure, which is like Amazon's AWS. It's their cloud service product. And Crowdstrike is like joined at the hip with Microsoft. And when they went down last week, it not only took down Microsoft's backbone Azure service in a lot of places, but it also took down airlines. There's still fallout from the airlines, and here we are 6-7 days later. Airlines, banks, payment services, universities, all kinds of people that relied on Crowdstrike took it as a big hit. And the stock has been going down pretty much ever since. So let's take a look at the chart. And you can see this is right at the moment. Here we are in the afternoon on Thursday. And you could see this stock just continues to make lower lows. Now, there's going to be a point where it bounces and everybody will go, hey, that bald guy on the internet was not right, or whatever. I don't care. I'm not here to be right. I'm here to try to make money and try to make you money if I can, or make us both money, obviously. But take a look at this chart. Now, look at this thing. This thing was a buy, a screaming buy for a long time. And then it had this glitch. They rolled out a piece of software or something and had one line of code that was bad. I don't believe any of the story, by the way, but that doesn't matter. I think it's all kind of maybe a little bit of a conspiracy theory, but there's no way a company like this rolls out a line of code. I used to run a software company and crashes computers around the world, industries around the world, based on just some sloppy rollout. There's just no way that happens, but it happened. And for whatever reason, you're saying that if you were short and you knew this was going to happen, you would have made a lot of money. So the stock topped out right under 400 bucks. You can see that about 10, 11 days ago. And then since then, look at all the red candles on the way down. Now, I want to point out a few candles. There's a gap down right here. There's a gap down right here. There's a gap down right here, right? And the stock has been, just increasing in volume every time it does a gap down. Now, let's look at this fundamentally, and we'll go back to the chart in a second. So we've got energy on gap downs. That's the chart. But think about it. This company is not just going to be able to go, oops, sorry, right? Sorry, I didn't pay my taxes, IRS. Sorry, I didn't know bank robbery was illegal, right? Sorry, we screwed up the rollout. You can't just say sorry and expect everything to be good. Think about Delta Airlines, which is experiencing 6 days of fallout from just that, 7 or 8 or 10 hour outage. Some people their computers are bricked. They haven't even gotten their computers back. Now, think about what Delta is going to do. They've lost millions of dollars. I heard from a friend of mine, UPS has lost millions of dollars just from that short outage. You think they're going to sit back and say, oh, it's okay? No, they're coming after Crowdstrike and their insurance company. And so the insurance company is going to find a way out of it because they're going to go like, well, we can't insure you against some schmo putting in a line of code. I mean, that's your business. Like, we're not going to insure that. And so this company is in trouble, I think. And I can tell you, I've looked at stock after stock after stock, and I've seen that when a stock goes down with this kind of action, there might be a dead cat bounce up to the 200-day moving average. That's this gap down right here on high volume. There might be a dead cat bounce, and everybody's going to go, okay, good, the selling is over. But let me tell you where I think this could be going. Based on this chart, you've got two significant swing points on the daily chart that are important. There's other swing point on the weekly chart, but they go farther back. This stock has been on an uptrend. It's essentially more than doubled for just in the last less than a year. But there is I put a swing chart line here at 238.61. That's where I think it's heading, just for giggles, right? I think you can look at it and you go, wow, I think it's heading right down there. That's a significant swing low. That's where it made a little hammer candle, very low volume hammer candle, not very significant, but that's where it kind of pivoted and started going back up. That's the minor swing point. Here's the more major one on this chart, and that's here at 169. And you're seeing a little more volume on that swing point right there. It's about 6.9 million shares, something like that. That is a significant swing point, and it's going to come down there and test it. And I'm going to tell you, if it tests that swing point on more than 6.9 million shares, this stock's probably going to go even lower, certainly to that 157 level. And if I pull up the weekly chart, you're going to maybe see other swing points that are important. The bottom line is, I was having a conversation earlier this week with someone that was interested in taking one of my courses, and he said, yeah, I saw that you put out a video on Crowdstrike. Is it time to buy? And I'm like, this is the problem with the market, is so many people think that because a stock goes on sale that it's a bargain, it's a buy. You know, stocks that go down like this, sometimes they are bargains and there's no reason for them to go down. But this company is in trouble. And I think, you know, I don't care how good of a company they were running up until that $400 price. Now the fundamentals have shifted, and now the company's going to be dealing with earnings problems. They're going to have to settle lawsuits with these other companies that are using them. They're losing customers. Elon Musk has said, you know, X is off of that company. So that, you know, they are in trouble. And if you don't see it coming, like, you're going to get hammered. By the way, if you've owned this stock and you know didn't get out when some of the early signs happened above the 50-day moving average, which, you know, I always say good things happen above the 50, bad things happen below the 50. You know, if that stock was starting to threaten the 50-day moving average like it was right in here, you know, you could have been getting out. You could have had a rule that said sell me out, you know, if it closed below the 50-day moving average, in which case you'd have gotten out 6 days ago. And that would have been at about 352. Now, I'm not saying you would have or wouldn't have. I'm just saying if you had, the stock was at 352, and today the stock is sitting at 100 points lower, right? You'd have saved 100 points. You'd have saved 33, 40% on your investment. So you've got to look at the chart action. You can't just put money in and hope that the company, you know, eventually goes out. I mean, it probably is a good company over time, and you know, in 3 years this will be a little blip. But right now, if you're sitting through this, don't hope that it's going to come back. I see a lot more downside potential than I do see for a significant bounce. I think it could bounce. These stocks tend to do what's called a dead cat bounce, meaning you could drop a dead cat out of a 6-story window and even the dead cat's going to bounce. But that's a false bounce. It's probably going to be a low volume bounce. And if it hits that 200-day moving average and it doesn't do it on significant volume and hold it, this stock's going to keep going down to these other swing points. All right, that's my analysis on CrowdStrike. Thanks for joining me. See you on the next video. Take care. Bye.